is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth, and you'll hit a home run. I mean, a big home run.
Yeah.
And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We have 5 days a week. We go 7 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Gobble, gobble, gobble. I love it. Be impeccable with your word. Manifest your true intentions. Regardless of what language you speak, your intent will be manifested through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials down 5, Nasdaq's off 115, S&P's down 15.5. Gold contract down $15.50, $17.53 an ounce. We have silver down 17 cents, $21.02 an ounce. Light sweet crude off 35 cents, $79.73 a barrel. Notes and bonds. The 10-year note, flat, 112.09. 30-year flat, 125.13. But not King Dollar. King Dollar's not flat. King Dollar's up 913 ticks. Trading 107.840. Euro 102. Yen 142.08. And the British pound is at 118 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, we had a sideways move, folks, with light volume. So we'll see whether that's how it's going to trade out the rest of the week. Maybe vacation's already started, man. 34 million shares, that's nothing. Friday, we went higher with 92 million. That's what you want to see. So sideways, it's not the end of the world, bottom line. We take a look at the NDX 100, the 3 Qs. What you have with the 3 Qs, there's divergence here. And inside the 3 Qs, you're down 250. Now, the 3 Qs are inside the 284.60 level, folks. So once you get back inside the lower range again, it's like it's game for the bottom of the range. It's close because you're only 75 cents inside of that bottom range. A little bit more, but that's not a lot. You go another $1.50, and then that's saying that gap's going to be wide open. That gap there is a 268. And you got to remember that in a vacation week like we have, this market, you can push this market, bottom line, wherever they want to push it. So it's going to be wherever they think the trend can make the most amount of money in the least amount of time. We take a look at the gold contract. Gold's pulling back, and it's into its strength. So that's telling me that gold can actually pull back to the 1720 mark, and right now you're at 1753. As you can see, when we broke top side, you had wide price spread. You had volume behind the move. This on a smaller scale, because what we did do with gold is that it went straight up from 1632 to 1806. So when we take a look at this, and we just say, okay, what's a 0.382? Well, 0.382 gets you down to 1738, and a 50 is going to get you to basically 1718. The strength, the beginning of that strength, is where I got that first number. And it's about King Dollar. We take a look at King Dollar. And, what's happening out here today, folks, is that this market is acting really well for King Dollar going up 906 ticks. But my take is all over the place. The bottom line, you really have a slow market. So if we take a look at King Dollar, you're going to see a 0.382 retracement to the upside, gets you into this 108.322. Now, the way to, hey, we'll see what happens. My take, it looks like to me it's going to break it. And this will be the week to break it. You break it, you can get all the way up there to the 109.24, and then we see what happens, man. That's the 50% retracement of the last move down, And, what you did have, it's pretty amazing. So what you also had just on this bounce, the CTFC, all the shots and longs get reported on Friday, and everyone was piling into the dollar on a short position in the futures market, folks. So the bottom line is it totally makes sense that we're going to get some kind of a bounce out here. You had Disney brought back Bob Iger for 2 years. See if they can straighten that mess out. Bottom line, they got a good, nice pop-up. It's up 5.5%. Now, if we bring Disney back, because we were benchmarking this on the March 2020, yeah, see, that's what it did, man. That March 2020. Did it ever get to the low? Let's see. The low was, so the March 2020 low was 79.07. Got to 85. Okay. So now what you have with Disney, okay, and you get a lot of equities that have been getting into that bar. Now the real question is going to be, can you get any strength as you move higher? And I expect, this will move higher. I mean, when you get a big change of leadership like that, Iger was the one that developed Disney Plus, so, we'll see if many of these films and other things that were going to be on Disney Plus basically get rerouted there again, because when the other guy came in, the bottom line, he pushed Disney Plus out, but they stopped a lot of different films that were out there. Some of the higher volume equities that we have out here today, you have Amazon's down $2. Disney's the big one. That's up 5.5. We have, let's go to, we got to go to Tesla, because Musk is just in the middle of a total mess over Twitter. And there it is. It's affecting Twitter. I'm sure that the shareholders of Tesla are going to be going, are you kidding me, man? And the chart is saying that now Tesla, okay, so what's that number there? That number's, yeah, man. We're at 168. You're going to get a little support at 166. But this broke everything, man. This is telling me that this thing's going to go down to like $64. Right there. Which would be just a mind blower, man. I mean, it wouldn't be a mind blower because we know how much equity that, Musk sold up at the 400 level. Never mind where it's at like 100 plus right now. I mean, he would just kept laying it out. And that's going to be a case at MIT, Harvard, one of those, about pushing paper out at high levels and then making a bad decision buying Twitter. But that's his problem. Dow Industrials right now down 4. Nasdaq's off 114. S&P's off 14.5. Stay right there, folks. Come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials up 5. Get the NASDAQ down 106. S&Ps are off 12. Let's get over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also a great newsletter and Mastering Probability. Now, it's very easy to get Steve's newsletter, folks. Come over to our website at TFNN. You go into newsletters, and you're going to see Mastering Probability right on your right-hand side. You can get Mastering Probability for 1 month for $149. You get it for 6 months for $695, which is a savings of $199 or 22%. And you get it for 1 year for $1195, which is a savings of $593 or 33%. Now, they all come with a 30-day money-back guarantee, folks. So you can come over, get the newsletter. You'll have a great newsletter for a month. If it doesn't work for you on the 28th day, just cancel the newsletter. Sometimes they work for folks, sometimes they don't. That being said, when you get the newsletter, Steve has a huge amount of archives on there explaining how he looks at the market. So you're going to get an education that's phenomenal, okay? And then you have the choice about keeping the letter or not keeping the letter. Steve Rhodes, what's going on?
Well, I heard you talking about Tesla, and I just pulled up the charts. I haven't looked at the stock for a while. And actually, Tom, 2 weeks ago, it confirmed a weekly A to B equals CD to the downside. That gives us a 1-to-1 price projection of 107. So
pretty heavy, huh?
Yeah, the monthly, I don't know that we have enough days left in the month out here. So the monthly swing point had 1.9 billion, and right now we're at about 1.3.5 or so. So I don't know if there's enough trading days, you know. I mean, it does about 100 million shares a day. I just don't think it's going to be enough to get there. But still, this thing is below all profile levels, daily, weekly, monthly. It confirmed weekly A to B equals CD to the downside. So, and it's at 168 right now. If it does get to that 107 level or lower, like you were taking a look at, I think maybe you were looking at some volume or a swing point or what have you.
Yeah, I was looking at the last time I had volume on the way up. Isn't it amazing when you think about it, though? It's like totally. It's so wild, folks, okay, that, unfortunately, the shareholders are asleep at the switch, man.
Yeah, and that's word, unfortunately, because, it looks like, and I mean, that's still a significant way down percentage-wise from where we're trading right now, right?
I know. Unreal. Seriously, man.
Absolutely. So last week when we were together, we were talking about whether or not we're trying to answer the question, have we begun a new bull market? And my answer was no. And the reason that my answer was no is because when we take a look at this chart, the S&P, the NASDAQ 100, and the Russell 2000, they continue to trade within their descending price channels out there. So we can see over on the lower left out here, it's only the Dow that is broken through that price channel. The Dow's break of that price channel is confirming for me that global capital is flowing back to the big cap stocks out there. And as we take a look at the Dow here, so this is a really cool chart because this allows us to take a look at the Dow priced in the other major currencies. So the left-hand side is the Dow priced in dollars. Next to that is the Dow in euros, then Dow priced in yen, and Dow in pounds. Now this is a quarterly time frame here, and we can see that the Dow priced in those three currencies has made new all-time highs well after the Dow priced in U.S. dollars has made its high out there. So it is not a bear market at all if you're trading the Dow and you're over in Europe, whether in the U.K. or just the rest of Europe in euros, or whether you're in Japan right now trading the Dow. And that's really important to understand. And it's this global flow of capital that will eventually take the Dow priced in dollars to a new all-time high. But the key here is eventually. Doesn't mean that it happens tomorrow or the next day. And when we take a look at the weekly Rhodes Momentum Indicator bottom patterns, we took a look at this last week, and this is one of the archives and one of the great tools that is included in a newsletter subscription out there. So if you're interested in learning this pattern, and you should want to learn this pattern because it works on all time frames, all instruments. These are the cash indice charts out there, generating weekly Rhodes Momentum Indicator bottoms is a real good signal of a potential bottom that is out there. So, which was the reason why we're entertaining, have we become a new bull market? Now, this table here, Tom, this looks at the performance of the instruments that we've got out here for all of 22, and then since our last bottom, which was October 13th, inside the market. And so if we take a look, if we kind of go from the right to the left, the second row, second column, I should say, from the right shows the rate of change over the 1 year, over the last year, during the last year, not 12 months, but since January 1st, first trading day of the year. And here I've got the, so if you don't, if the charts didn't make sense to you and math makes sense to you, you can see that the Dow priced in euros for the year is up 3%. Or around 3%, nearly 15% priced in yen, 6.5% priced in pounds out there, and off 7% in U.S. dollars. If we take a look at the performance of the S&P, the NASDAQ, and the Russell during the year, you can see the Dow has held up much, much better. Again, another sign and indication that global capital is flowing into the large cap stocks out there. And it's the reason why we really want to pay attention to try to identify when that next bottom comes in and when global flow of capital is really coming into all the U.S. instruments. We can see here the U.S. dollar index, your king out there, has performed very well, up 13% for the year. And I'm in your boat. The Dow is trading up into some resistance levels, and if it takes it out, it says we're headed higher. So my inclination is that that's what the dollar is going to do. We can see gold here off about 5%. Of course, light sweet crude, the big winner out there, up 31% for the year. So this table looks at that performance, and the Dow has held up much better than the S&P, the NASDAQ, and the Russell. So in summary, understanding how instruments are trading in the major currencies is going to be critical from this time forward, because a real bull market, and this is again is the Dow down to the bottom right here, is one where the instrument is rising in all major currencies out there. And when it comes to the U.S. dollar, you talked about that. Both gold and the Dow pretty much have an inverse relationship. So the bottom portion of this chart is our correlation tool. This is looking at, on the left side, gold versus the dollar. On the right side, the Dow versus the dollar. When the bars are below zero, and this is set for a 5-day average, when the bars are below zero, it tells us we have a directional correlation on average during a 5-day period of time. So I anticipate that when the global flow of capital is really in full steam mode, and we sort of saw this, Tom, coming off of that October 13th bottom out here, we saw both gold and the U.S. equity markets move higher. And so that's what I expect we will see take place this time around when that global flow of capital is here in the U.S. So it's already here. Is it in full force? I don't think it's in full force, because when it is, we'll see gold and the U.S. markets move higher. And that means that the correlation bars that are at the bottom of the screen, they'll all be above zero versus those below zero out there. So what I want to do is, I never really tell folks what's included with the newsletter. As you said, gargantuan amount of training and education that is out there. Each afternoon, folks, I send out a end-of-day report. And that end-of-day report is taking a look at the index ETFs along with each of the sectors inside the S&P 500. So part of the newsletter is to teach someone how to read the charts, what the tools are that I have on the charts. This is providing us with market profile information. It's providing us with support and resistance levels. Here are the other set of charts for the other sectors inside the S&P 500. These charts show exactly what the indices are doing. So I provide weekly, daily, monthly, yearly charts for folks to take a look at. And also included are these different tables. So this happens to be a table that is just for the Dow 30 stocks. If you wanted to know what I think the current market outlook is for each, it lists it out there right there. So Dow Chemical is in a breakout bullish mode for its daily time frame. It's consolidating on a monthly, and the on a weekly chart, and the monthly chart says the bull move is over out there. So you get all this great information that helps you understand where support, resistance is, and exactly where we're at with regard to the patterns.
And folks, so you just saw this, right? And if you're in your car, remember it's archived, because it's a phenomenal newsletter. There's a phenomenal amount of information out there, and you'll learn it. It's real simple. Get over there right now. Steve, you have a great one. Safe one. Look forward to speaking to you tomorrow.
You too.
Thank you. Stay right there, folks.
It's a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 52. We get the NASDAQ off 125. S&P's down 18.5. Let's go to our man John in Philly. John, what's going on, brother?
Hello, Tom. Happy Thanksgiving to you and your clan this upcoming week, and same to all your audience.
And to you also. I know Thanksgiving is such a beautiful holiday, no doubt, man.
Yeah. You. We love that. We love that last excerpt with your grandson.
Yes.
I'm sure he's going to be a bundle of joy at Thanksgiving dinner.
He is. He's going to be 2 February 2nd. He's getting there. He's a big boy. I love it.
Groundhog Day, baby.
I know. Trust me. It's just like me calling the market, man.
Hey, Tom, just by way of background, from that October 13th low where we reversed 5% intraday from low to high, going into, the week of election, it was pretty clear to me that we were bouncing, that our bounce was in order and was unfolding nicely. And parenthetically, thank you for discussing the action day by day during that period. But since that point in time, we've now stalled, and I'm attempting to try to answer the question for myself. Does this does this rally off of October 13th have legs and heads higher, or is it prone to topping and reversing and going, meaningfully lower? So I'm working on that question. And just today I was reviewing a bunch of stocks, and I stumbled across Morgan Stanley, looked at the pattern on the weekly and daily, and I'm just looking around for action in individual stocks just to see if I can, get clues of what the future might hold. And in looking at Morgan Stanley, we bounced twice. We've come up to that 92 level. I can see, two scenarios would be real easy to think about going forward. One is we're double topping here at 92. We've come back up to that level that we traded in between September of last year and February. So that was 7 months of trading above 92. Then we dived below. Now we're coming back up. We could easily envision supply there. The other possibility, of course, is we're only pausing here against 92 and we blow higher, which would be the bull case probably for the averages. So that's what I'm thinking about. I was wondering if you can look at the daily and the weekly and Morgan Stanley, assess price and volume as you see it, and share with us, if you see any clues from that equity or the next move in that equity. Thank you.
This is just an awesome couple questions, right? So this morning, John, what happens, folks, I'm on TD Ameritrade Network once a week, and I got to pick out 3 stocks to trade. That's it. The segment is an active trader segment, right? So this morning, I'm basically banging it out, and I'm saying to myself, I can't believe this, man. I had to go through like 200 stocks, right? Because normally what ends up happening is this, folks, okay? I get a program. I can hit the program a couple times and say, okay, I can get a pretty good grasp on, what's going on. And at TD Ameritrade, normally I try to get them long positions because most people go long, right? This morning, John, I couldn't find a long position, man. It was like, okay, I went through the longs, then I end up going short, all right? So I think that right now, that, we're going to have a pullback before we go higher. Because of that, I just went through so many stocks. It's like, okay, man, most of these stocks want to go down. Now, when we go to Morgan Stanley, I think Morgan Stanley wants to get down too. But this is a nice setup. I mean, this is, you got a major bank, folks, major broker-dealer, makes money hand over fist. But guess what? It's coming up to that level that John was just talking about, meaning that 92, and it can't handle it. Every time it gets up there, you can see, watch this. We came down off of this level. It's, 78 million shares. The first time up we went, and now this is a weekly. The first time up was 29 million shares. Last week was 27 million. The week before that was 33. That's not enough. That's telling me, and that's right at ICE. I mean, if you always looking at, boundaries, I talk about trading ranges a lot. That's ICE. And the bottom line is that this doesn't. There we go. This just is having the strength to get over ICE. So I think we're in a little slow patch right now. Now, the S&P, John, that larger ABC on a monthly is still in place, but what can happen here is this. If we just look at the cash S&P, folks, this would be easy to do it with this because it's going to be the date that you want to look at. When you take a look at this, what you're going to see on the monthly basis, it's a monthly ABC structure. But this thing can go all the way up to, we're at 39.54, and it can go to 43.25 and still be an ABC down. So it looks to me like this week here, you're going to go sideways, you're going to back off a bit. We'll see what, I think the market's weak right now. But what has happened last week is that it was pulling back with light volume. We know how that goes. You pull back with light volume as the market wants a higher price. That being said, this dollar wants a lot higher price. So I think we're going to pull back first. the volume stays light, then, yeah, we have a shot to go higher. Morgan Stanley's a shot, and I think we're still in a bear market. I mean, a big bear market, too. I think what the Fed's trying to do now, folks, so you're going to hear more of this, because there's a whole generation. Picture this. We've been on a bull for 15 years. So if you're 30, you're 45 years old, right? If you were 40 or 55 years old just getting in the marketplace, you've never seen a contraction. If you haven't been around even like the last time that rates went higher, what the Fed's trying to do out here this morning, John, which I saw, right? They're trying to explain to people that if we go for longer, which we are going to go for, not keep raising the rates, there is going to be hurt. And that's where we're at, folks, okay? So I suspect another 3 or 4 months, you're going to see a lot more hurt out there. You know, people are hanging on. I'm talking about businesses, you know what I mean? People, too. But that's what this is looking like to me, you know, so.
That discussion is very thorough, more than I expected, and there were some little gems in there. So thanks a bunch. That's very helpful, and yeah, perhaps we get a little weakness here the next couple of days and get clarity after the holiday.
Yeah, because what John just brought up, folks, there's not real clarity here right now. So, you know, we went up. You know, you're pulling back. When you go sideways with light volume, it's good. When you pull back with light volume, it is good. The wild card still is this dollar. You know, like I'm really surprised today, you know, it's not hit actually more. You know, because if we have another day with 1,000 ticks tomorrow, you know, we'll see where it shakes out. But, you know, you get the gist. If it's light volume, we're in good shape. If it's not light volume, that's a whole different ball game. I think in a larger range that we're going to go pull back a bit, go higher, have the volume drop off again. At the top of that ABC, maybe it gets to 4,200, blows some minds, right? The 4,300 we'll see. And then guess what? Then you're coming into, and I'm going, now I'm all the way out to January and February, folks, going, you know, downtown. So, yeah.
Thanks a bunch, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one. Our phone number is 877-927-6648. You get the Dow. Dow's right now down 43. You get the NASDAQ down 116. S&Ps are off 17. No, these aren't big numbers, folks. That's the bottom line. You have some equities with big numbers, but these aren't big numbers. Stay right there, folks. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Welcome back, folks. Dow Industrials down 54, and Nasdaq's up 122. S&Ps are off 18. So let's go take a look at Goldman Sachs. We looked at Morgan Stanley. Now, Goldman Sachs, folks, this is not the same chart, nor is a Morgan Stanley a Goldman Sachs, or vice versa. And what the difference specifically is, well, here, you can see chart-wise the big difference in the chart. But this is going up to its highs. It's got volume behind the move. Now, this is the big difference. I wonder if they break this out. I don't think they break this out, but this is how it works. Let me just see this for a second. If they're breaking out. Well, here, this is one way of looking at it. See that asset management right there, $14.9 billion? Now watch this. That's Goldman, MS. $14.9 billion. Remember that number. Wealth management, 24.2. Investment management. See the difference? That Morgan Stanley, folks, is a bank, is a broker-dealer, is a trader. Their business, however, is predicated on financial advisors. Okay, so as the accounts go down, their percentage of the money that the broker-dealer makes goes down. So those are two different charts. If we go, meaning that, wondering, well, would Morgan Stanley break topside? They're two different businesses. You can see it fundamentally. If we go take a look at Nike, Nike, let's take a look at this thing. So Nike, we got into the March 2020 area. That is 86, and it came down to 82. Nike's gonna have to build cars for a long period of time, man. I mean, you came up inside the range. I mean, it's inside a range right now that could go to 118. You're at 103. Put this on a weekly for a second, or daily rather. Yeah, this is built. Nike looks to me like it's building cars for higher price. You can see. If we did last week, you go higher with 12 million. Today, you're pulling into that with 3.5. That's an equity that wants to go higher. Now, we got to get into this. Tommy got into this morning, GBTC, okay? So this is the Grayscale Bitcoin Trust. And the way this is supposed to work, folks, is that they're claiming that they have Bitcoin for every single share. And you can see this right here, that they're saying that we are now at a negative 45.7% premium. So specifically what that means is that, do this. So they're saying that Bitcoin is trading at 15,842. So they're saying if you buy Grayscale, well, guess what? You're going to be buying that at approximately $8,000 instead of $15,800. Now, we know that sounds bizarre. This has been going on a long period of time. Nothing like this, but this is what has happened. Now, listen to this, man, because this is intense. Because Tommy got into this a bit, and I had read a couple more of them. Okay, so look, watch this. The problem, there's going to be a problem here, man. I wouldn't be trading this thing. If you trade it intraday, fine, but it might get stopped at some point. So when you're looking at this, right, it would be like, okay, if that's really the case, well, first off, why don't you just close the fund, sell all the Bitcoin, and everyone just makes 100%, right? Well, they're not going to do that. And one of the main reasons they're not going to do that, here, see this next thing? Grayscale, DCG insolvency could send GBTC into liquidation. Now, this is coming off the filings, folks, but I want you to see something here. The guy, okay, here's the number, okay? So filings for GBTC clearly state that insolvency or bankruptcy of the trust sponsor, listen to this now, Grayscale in this case, could constitute a reason for liquidation unless 50% of the shares in the trust vote to transfer to a new sponsor. Grayscale, now here it is. Grayscale is a subsidiary of Digital Currency Group, DCG, which owns or is invested in over 200 other companies, which they're not saying there. That's 200 other companies, folks. This is the king. The guy that's behind this is one of the kings of Bitcoin. You never hear about him. And one of those is Genesis, is a crypto broker with a crypto lending arm that is in a liquidity and solvency crisis that has brought the health of the parent, DCG, into question. So, check this out. There's, if you really want to hunt this, I read quite a bit of this over the weekend because I'm saying, well, you know, I've always been intrigued with this. It's like, okay, how can you sell it at half price? Well, the bottom line, the guy that runs this, right, he is the monster, and he was in the monster of the actual mining of the Bitcoin, setting these places up, and he's been under the radar for a long period of time, okay, which is really smart, okay, because the bottom line, we know what happens when you stick your head out. That being said, this Grayscale, right now at this price, it's giving him, as a company, $300 million in fees per year. Well, last year, this was giving $1 billion in fees, okay, because so you can see they're never going to close the thing. The point being that when you look at these 200 companies, if you pull up a few more articles, you're going to see this guy's into Bitcoin all over the place. So I wouldn't touch the thing, man. And I suspect it's only going to be a matter of time that, you know, you're going to have, someone's going to come into this and say, okay, now this is another part of this that common sense, you know, just doesn't make any sense, right? Like, okay, so you buy Bitcoin at 15,823, or you buy GBTC, and your Bitcoin only costs you like $8,000, right? No, not right. Yeah, that's right mathematically, because that's what you're doing, but guess what? GBTC might not have anything. And we'll see, you know, how this shakes out, man. Whether the SEC comes in, whether, you know, whether everyone's asleep at the switch again. You know, because when you dig into the story about this guy, as all these tokens were going, that's all those companies. They're spread out everywhere because of the fact that they were actually, he owned mining companies also. That's how it works. So we'll see where it shakes out. Let's go take a look at the silver market out here. We have a silver right now. Silver's trading down 13 cents. Only 13,000 contracts. That's good contract volume, man. That's light contract volume. So, you know, I think, you know, bottom line, I think it's going to pull back further because this also got into the strength. The top of that strength was, well, look, it's right here. 2107 was the top of it. There's just 2106. You know, we'll see whether the longer you get into the 2107, the higher the probability you're going to go right back to strength, which is the 1950. The way, this is how this looks to me, and I've seen this plenty of times. You have a calm market here going sideways, but yet the dollar's going up exponentially, and, you know, it's like, okay, everything's calm. Well, that is not how things stay, folks, when the dollar starts taking off like a rocket ship, okay? So I expect what you're going to see is that this week, you're going to have more sideways to downward pressure. Dow Industrials are down 35, Nasdaq's up 109, S&P's up 15. Stay right there, folks. We'll come right back.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. There's going to be pros here they're going to be down and down forever. Kathy Woods she's making a fortune on her ARC deals, but I can tell you, man, she's piling into Coinbase. So just in November, she bought $56 million worth of Coinbase. I mean, really? Let's see, where's November start? Yeah, let's see. There it is right there. So November started $61.88. And now Coinbase, check this out. Now, you know what blows my mind here? Is that this is supposed to be, anyway, fundamentally, this equity is losing so much money. They're telling you they're losing so much money that it absolutely blows my mind that, you get a professional, double down and triple down. So Coinbase this year is going to lose $9.42 a share. And, yeah, do they really have, what's that, $2 billion? I don't think so, man. Anyway, you get the gist of it. Things are kind of weird, man. Things are kind of going south with a few of these, This is where, evidently, they live in such a small circle that it's that type of feedback. And, of course, it's not their money. I mean, you can imagine, I don't think one tiger or tigress out here would put $56 million into Coinbase, technically or fundamentally. And it's like, okay, they've been doubling down forever, sad but true. That's the bottom line. So what do we have out here today? You have a pullback. You have a sideways move. You have light volume. We get a holiday week. I think that's how this is going to play out the rest of the week. We'll see where this dollar goes. The dollar's laying at highs. Okay, so this wants to go higher, and I can see that, real easy because we have gone down, quite a while now, straight down. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks. Look at him, folks.
Building wealth trading in the stock market seems impossible to most